the economies and markets across the region. We're joined by Feroze Azeez, Deputy CEO with Anand Rathi Wealth. Feroze, thank you so much for joining us this morning. First, let's take a look at the Australia's GDP data just released. So first quarter number, missing estimates in both its on-quarter and on-year growth numbers. So we're also seeing the RBA hinted that the possibility of more rate hikes to cope with inflation. So what's your take on its future recovery trajectory?
Good morning, Henry. Personally, I believe that these estimates are marginally off the estimates, 0.1%. It's not too different. But like you said, that there is a possibility of further interest rate hikes because the inflation is at about 7%, which is way above the target of 2 to 3%. So because at the cost of household expenditure, inflation is a big concern. So that's going to definitely dampen the growth prospects of the full year as well from an Australian standpoint. Point two, I think the domestic demand in Australia is slowing down owing to the interest rate hikes, resulting in household savings reducing. So the gap of about 3 to 4% in the inflation target, 7% is the inflation, 2 to 3% is the target. So I think 4.1% of cash rate could further see tightening as much as 4.5 to 4.75, and that's going to have a reasonable impact on the GDP growth of this financial year, this calendar year.
Well, in the meantime, we're also expecting to see Japan's GDP number later this week, and we are seeing pretty good performance of the Japanese equities market. Do you think the GDP number coming out later this week to further affect the market sentiment in Japan?
I doubt that because from a valuation standpoint, Japan has reached a territory of reasonable valuation levels. Of course, the slowdown has already been priced into the equity markets. I don't think the GDP numbers would give any negative surprise to the capital markets because liquidity in the Japanese market has improved significantly. If the liquidity measure which we use indicates that the liquidity this year is going to be almost about 20 to 23% greater than what we've seen the last year. There are some parameters we use to assess the liquidity of each of the markets. So I personally don't think that the GDP numbers could dampen the performance of the Japanese market, at least in the short term.
Feroze, also, if we compare the rest of the Asia-Pacific markets, actually, India market have been seeing pretty strong performance so far this year. So what's the reason behind that?
See, there are several reasons. If you look at the fundamentals, both on the economy side and the corporate side, if you look at the corporate earnings have given a pleasant surprise. If you just remove one of the companies, one of the Indian banks, which actually wrote off some money, which was an acquisition of the city consumer business, which is Axis Bank, the growth numbers have come stupendous. The Nifty earnings have reached about 840. If you just eliminate the Axis Bank's one-time expenditure on buying the city business. So 840 from 772 is a reasonable growth, about 8% growth in corporate earnings. So first, primary reason is the fundamentals on the economic side are great because the inflation is far more in control because the long-term inflation of India is 5.8 and we are at 4.7. That's far better than any emerged economy or even the emerging economies. That's point one. Corporate earnings are good. This year, the corporate earnings are expected to further go up by about 11 to 12% to 936 rupees as per our estimates on Nifty. The GST collection is one of the prime reasons. There's a 12% growth on the indirect tax collection, which has been very, very buoyant. If you look at the GDP numbers, we closed at about 7.2 and we still project about 6.5% for this financial year as we see it in India. As I told you, also the fiscal prudence has been there because the surprise increase in the tax collection has brought some degree of fiscal stability to the Indian economy. Given all these various factors, I personally think the Indian economy doing well and in turn the capital markets doing well on the back of domestic and the foreign liquidity. Foreign liquidity in the last 3 months, 2.5 months, we've seen about $7.5 billion flowing in to the Indian listed equity space.
We have 1 minute left for the interview. I want to ask you about, because you've mentioned about the inflation situation in India has been relatively well controlled. Do you expect the India Central Bank to raise or keep the current interest rate level steady?
I think the current interest rate levels will remain steady because we are well within the control of the range of inflation, which is the key reason why globally interest rates have been going up. It is business as usual. Interest rates for us, long-term averages have been 5.8%. So I personally think we are at the top end of the repo and the reverse repo, as we call them in the domestic interest rate market.
Well, fantastic stuff. Feroze, thank you so much indeed for your analysis. Feroze Azeez, Deputy CEO with Anand Rathi Wealth. Well, that's your